Hey guys, was Oracle all over your feed today? Even though their quarterly revenue missed expectations. On Tuesday, its stock skyrocketed by over 27%, and then on Wednesday, it surged another 36%. One day, its market cap hit $678.36 billion, and the next day, it even reached $950 billion during trading, surpassing JP Morgan Chase, Walmart, Eli Lilly, and Visa to become the 10th largest company in the S&P 500. Right behind Buffett's Berkshire Hathaway. How does a company that missed expectations rally this hard? What opportunities are the big players smelling? The answer lies in a massive cloud infrastructure deal from OpenAI, sent Oracle's remaining performance obligations soaring to a staggering $455 billion. What kind of deal is this, and why did they choose Oracle? But OpenAI's moves don't stop there. Broadcom recently disclosed that a mystery customer signed a $10 billion custom AI chip order, leading them to significantly raise their AI revenue forecast. Outlets like the Financial Times confirmed that the mystery buyer is OpenAI. At the same time, Google Cloud also partnered with OpenAI for computing power, breaking Microsoft's previous exclusive supply setup. With history's most insane purchase orders, OpenAI is pushing giants like Oracle, Broadcom, and Google into the spotlight of growth. What are they trying to do? Is it just about diversifying suppliers? Of course not. OpenAI is reshaping the entire Silicon Valley landscape with a capital tsunami, dragging the whole tech supply chain into a high-speed arms race. And the first shot in this race is aimed straight at NVIDIA. I'm Luna, here to translate the macro trends into your portfolio numbers in this video. Let's uncover the hidden story behind OpenAI's astronomical orders. Why did Oracle land this deal? What's OpenAI's game plan? With Broadcom and Google, why is OpenAI targeting NVIDIA? And how worried is NVIDIA really? Finally, we'll look at what opportunities retail investors like us can catch in this wave. Smash that like button, hit the notification bell, subscribe first, then watch. Good habits for making money in the stock market. First, let's talk about Oracle. Why did OpenAI choose them? Some of you might think it's just a big order. What's the big deal? But what you might not know is how rough Oracle's cloud business had it in recent years. Microsoft Azure and Google Cloud already dominated the market, while Oracle's cloud transition was slow, as Snail analysts said it missed the first wave of the cloud era. So why did OpenAI pick them over Microsoft or Google? Two key reasons explain Oracle's comeback. First, energy efficiency. You might not have heard of PUETS. It's a data center's power usage effectiveness. The lower the number, the more efficient. The industry average is around 1.5, meaning for every unit of electricity used for computing, an extra half unit goes to cooling and maintenance. But Oracle's data centers consistently maintain a PUE below 1.2. Don't underestimate that 0.3 difference. A computer monster like OpenAI, it means 20% savings on electricity per chip per year. That's huge. Plus, Oracle's data center in Odessa, Texas, runs on 100% renewable wind energy. That saves costs and meets U.S. government green requirements for AI infrastructure, something even Microsoft hasn't perfected. Second, chip compatibility. OpenAI used to rely entirely on NVIDIA's GPUs, but now they're developing their own chips. Oracle fits perfectly with their multi-vendor strategy. Their data centers support both NVIDIA GPUs and AMD's MI300X. Did you know AMD's MI300X offers about 32.1% better price performance than NVIDIA's equivalent in FP16 precision? The Go app, top for AI model training. It doubles computing power and saves storage. Oracle's Ashburn, Virginia data center is already deploying MI300X, helping OpenAI bypass NVIDIA's bottleneck costs and ensure a stable compute supply. So, Oracle's 27% surge isn't just about the OpenAI order, it's the result of years of building advantages in energy, chips perfectly timing with OpenAI's compute needs. It's like catching the wind and soaring to new heights, a beautiful rally. Now, let's dig deeper. Is the collaboration between OpenAI and Oracle just a business deal? It's not that simple. Behind this lies the U.S. AI strategy. In January this year, the U.S. government launched the Stargate project, planning to invest $500 billion over 4 years, partnering with OpenAI, Oracle, and SoftBank with the goal of ensuring U.S. leadership in advanced computing infrastructure. This is indeed an unprecedented infrastructure project, adding 4.5 gigawatts of computing capacity. What does 4.5 gigawatts mean? Its power consumption is equivalent to more than 2 dams, enough to meet the electricity needs of about 4 million households. How much will such a massive project cost? According to a statement released by OpenAI in January, the Stargate project plans to invest $500 billion over 4 years. With an immediate deployment of $100 billion, can OpenAI successfully pull off such a super project? Is Musk right when he says they actually don't have the money? Let's break it down first. OpenAI isn't going it alone. Besides OpenAI and Oracle, initial equity investors include SoftBank and MGX. Focusing on the collaboration with Oracle, OpenAI will pay over $30 billion over the next 3 years to lease data centers. But this investment is worth it. Partnering with Oracle will boost the total capacity of OpenAI's AI data centers under development to over 5 gigawatts, supporting the operation of more than 2 million chips. Combined with a smaller deal with CoreWeave, the total capacity of data center deals OpenAI secured is close to the annual target promised by the Stargate project in January, building 5 gigawatts of data centers with $100 billion. At the same time, OpenAI's partnership with SoftBank is strong. They're speeding up site evaluations and reimagining data center designs for advanced AI. Microsoft will also continue providing cloud services to OpenAI through channels like Stargate. Some say OpenAI is crazy. Burning money like this will bankrupt them, but look at the market's reaction. John like SoftBank are still aggressively buying its equity, and its valuation has surged to $500 billion, almost doubling in 6 months and more than doubling in a year. Why are investors so bullish? The answer is clear. OpenAI is betting on a compute monopoly. The core issue in the AI industry right now is insufficient computing power training. GPT-5 requires far more compute than GPT-4, and current computing clusters are simply inadequate. That's why they need to scale up their clusters as quickly as possible. Plus, ChatGPT now has millions of enterprise users, and daily inference demand is still growing. Without enough compute, they can't take on more orders, let alone compete with Google's Gemini. Behind this is a hidden battle for compute sovereignty. Whoever controls compute controls AI. Whoever controls chips controls compute. So how does OpenAI get chips? Some might think if they need chips, why not just buy NVIDIA's? No, there's an unavoidable problem here. NVIDIA's GPUs are general-purpose chips, not tailored for OpenAI's algorithms. It's like buying one-size-fits-all shoes. They might fit, but they're not as comfortable as custom-made ones. OpenAI's models use the transformer architecture, which heavily relies on matrix multiplication computing power. NVIDIA's GPUs, however, also handle gaming and graphics processing, wasting a lot of compute power. The XPU, co-developed by Broadcom, is specifically optimized for matrix multiplication, compatible with Oracle's data center hardware, integrating chip server compute scheduling from the ground up. More importantly, OpenAI doesn't want to be dependent on NVIDIA anymore. NVIDIA currently holds 80% of the global AI training chip market, but their chips are expensive and scarce. Some distributors say prices for NVIDIA's A100 and A800 have been rising since December, and delivery times have stretched from 1 month to 3 months or longer. Some new orders might not arrive until December if future GPT-6 and GPT-7 need even more compute, and NVIDIA jacks up prices. OpenAI's costs would spiral out of control. So, developing their own chips isn't an option. It's a must. It's like when Apple started making its own chips, no to fight Qualcomm, but to control its product roadmap. That's why OpenAI partnered with Broadcom. On September 5th, Broadcom CEO Hock Tan announced they'd secured a 4th major customer for custom AI chips with a $10 billion order. Insiders confirmed to media that the mystery customer is OpenAI, and they're co-designing custom AI chips set for mass production next year, aiming to break compute bottlenecks, reduce a reliance on NVIDIA. By the way, Broadcom's stock rose 4.5% in after-hours trading. In fact, the entire AI industry is doing the same thing. Google already has its TPU, now iterated to V5e, which handles both training and inference. Amazon developed Trainium specifically for AWS cloud customers. And we mentioned last time that Musk's Tesla is also developing AI5 and AI6 chips. What does this mean? The AI chip market is shifting from one dominant player to 100 flowers blooming NVIDIA. Its golden days may slowly be coming to an end. All right, now let's shift our focus back to NVIDIA. How worried are they really? Although NVIDIA is still the top dog, pressure is mounting. Its GPU business growth is slowing. And major clients are now developing their own chips. Google, Amazon, Meta, OpenAI. These former cash cows are now building in-house. NVIDIA's market share will inevitably shrink. Over the past 5 years, the narrative was, whoever trains big models needs to buy 100,000 H100s first. In the next 5 years, the narrative becomes, whoever can buy 10,000 fewer H100s saves $150 million. For example, the emergence of the XPU is a critical step for OpenAI. Of course, NVIDIA isn't sitting still. They hold 3 aces. First, the CUDA ecosystem. But note, OpenAI's training framework has long been self-developed. Since GPT-4, they no longer rely on native CUDA. Instead, they write their own Triton kernel, which runs across AMD, Intel, and even their own chips. Second, production capacity barriers. TSMC's CoWoS packaging is indeed tight, but Broadcom is one of TSMC's top 3 customers. Google's TPU, Apple's modems, Broadcom's switch chips, they all get priority at TSMC. OpenAI's orders will only strengthen Broadcom's influence at TSMC, not weaken it. Third, networking capabilities. NVIDIA has InfiniBand and NVLink, but its competitors are advancing rapidly. In other words, NVIDIA's moat is being filled in bit by bit. And what's scarier is that this is just the beginning. When the first XPU chip lights up, when Oracle's OCI revenue growth surpasses AWS for the first time, when ChatGPT's iteration cycle shrinks from months to weeks, that's when the market will truly realize. AI competition has entered a new era, not about who has the biggest models, but who saves more on costs, who iterates faster, and who controls their own chips. It's not that NVIDIA isn't good, it's that their customers have suddenly become better. This isn't a tech upgrade, it's a power shift. So friends, if you're still stuck in the old narrative of NVIDIA is forever the king, thinking that H1000 shortages will let Jensen Huang cruise for the next decade, then take a look at what happened in the past 7 days. Oracle's stock surged over 27%, Broadcom's stock jumped 15% at one point, and OpenAI's valuation exceeded $150 billion. The market always moves faster than analyst reports. It smells the blood in the water of power shifts before retail investors DR. Of course, there are risks. Don't just see the surge, there are landmines ahead. First, Oracle's leverage, high debt, could lead to credit rating downgrades if cash flow doesn't keep up. Second, OpenAI's burn risk. If they spend $115 billion and revenue doesn't follow, their $500 billion valuation could crash. Musk wasn't wrong saying OpenAI doesn't actually have that much money. Third, private credit overheating. Too much capital flooding into AI compute could cause a crash if demand doesn't meet expectations, especially for companies building data centers with loans. What if XPU tape-out fails? What if Stargate's environmental review fails? What if the Fed delays rate cuts, raising OpenAI's financing costs? Any black swan could turn $115 billion into smoke. But OpenAI is no longer a startup. It's playing with a national team strategy, fighting for sovereignty over AI infrastructure. If it succeeds, it becomes the next AI leader. If it fails, it will drag NVIDIA down with it into a red ocean of price wars. No matter the outcome, compute will no longer be expensive. AI will no longer be scarce. And consumers will benefit in the end. As for investors, stop asking, can I still buy NVIDIA? Instead, ask if compute eventually becomes as cheap as cabbage, who will still make money? The answer, of course, lies among the shovel sellers, the one preparing to dig for gold themselves. Today, that one is OpenAI. Finally, let's talk about opportunities for ordinary people. I'm not telling you to chase Oracle or Broadcom, but see the trends behind them. First, the compute infrastructure play. These are the shovel sellers for companies like OpenAI and Google. Oracle providing cloud infrastructure, Broadcom making custom chips, CoreWeave offering specialized AI cloud services. Their performance is directly tied to AI compute demand. As long as AI keeps growing, they've got a shot. Buy on dips. Don't FOMO at the top. Second, the energy plus compute track. Compute now follows energy. Oracle's data centers are in Texas, Pennsylvania, Washington, Schneider Electric's compute power synergy architecture underlying power supply, mid-layer compute regulation, upper layer coordination will become trend. So companies in wind hydropower, power dispatch, and data center energy efficiency like Schneider may benefit. Third, the AI productization tools, track. Companies like Statsig that help AI firms with product experiments, or those in AI APIs and security are under the radar now, but as the product experience race heats up, their value will grow. I'll leave you with a question. Do you think OpenAI can become the Apple of AI after burning through $115 billion? Or can NVIDIA hold onto the top spot? Drop your answers in the comments. Let's discuss. Investing isn't about luck, it's about spotting trends. I'm Luna, here to translate the macro into numbers in your account. Smash that like button, hit the bell, and we'll see you next time.